Ladies and gentlemen, Assalamu alaikum. Welcome to our webinar 60/40, the timeless approach to modern investment. We thank you for joining us today. Here are a couple of housekeeping points before I begin the webinar. This webinar is being recorded, and we'd appreciate if you could hold your questions till the end of the session. However, feel free to type in the questions in the chat box. The purpose of our today's webinar is to make it easy for an ordinary saver to build their wealth using a very simple 60/40 strategy. In times of uncertainty, constructing a financial narrative that aligns with long-term objectives is paramount. आप क्यों इन्वेस्ट कर रहे हैं और किस लिए इन्वेस्ट कर रहे हैं? What are you investing for and why are you investing? The 60/40 portfolio, with its time-tested principles, offers a blueprint for investors to navigate through the complexities of the market and not try to game above it. Short-term losses, though inevitable, should not overshadow the broader narrative of wealth accumulation and financial security. More than ever, we recommend maintaining a disciplined approach to long-term investing going into 2024. So basically, we have divided our today's session into 6 sections. I'll talk some initially with what is 60/40 strategy, and then I'll dive deeper into how the portfolios which have followed a balanced strategy, which is 60/40, have performed over the period of years. I'll also go and shed some light on what are the features of a 60/40 portfolio in the modern world and what considerations and changes have taken place. And then we will talk about how the strategy is likely to perform in future. So we know in Pakistan, if there are losses in your portfolio and years there are in which both stocks and bonds generally decline, and they could be particularly hard to stomach. जैसे कि 2022 में हुआ था. Interest rates बढ़ रहे थे, bond की prices भी नीचे जा रही थी, and equity markets didn't perform that well as well. Such periods can make reactionary paces seem intriguing, but let's take a step back to understand the bigger picture. So what is a 60/40 investment portfolio? A 60/40 investment portfolio is made up of 60% stock and 40% bond. This term has become synonymous with a balanced portfolio, balancing risk tolerance between stocks and fixed income securities. It aims to balance growth and stability, offering participation in market upside through equities while mitigating risk through bonds. Despite recent debates questioning its efficacy, the 60/40 portfolio remains relevant, particularly when tailored with modern diversification strategies. However, using it as a blanket term can be misleading, as there are many ways to build 60/40 portfolio to maximize diversification. But let's stick on this basic definition for the time being and move on. So let's talk about the little why should you invest your portfolio in a balance of 60/40. The 60/40 portfolio has been long revered for its balance between growth and stability. The 60% allocation to equities allows for participation in the potential upside of the stock market, capturing long-term growth. Meanwhile, the 40% allocation to bonds act as a stabilizing force, providing a cushion during market downturns and generating income through interest payments. And then we have the most primary or cornerstone of investing, the benefit of diversification. The blend of equities and bonds provides diversified exposure, reducing overall portfolio risk. It has the capacity to generate income. So keep in mind that the 60/40 in term an interest rate scenario where interest rates are between 15 and 16% on a long-term average generally are capital protected by nature over the period of 3 or 4 years. Even in periods where the prices of both bonds and stocks are going down, these portfolios have the capacity to generate income or the capability to generate income. Bonds contribute to the portfolio's income stream, offering a generally more reliable source of cash flow, as I said, even in the most turbulent market conditions. And to add on to this, the inclusion of bonds act as a buffer during market downturn, helping to cushion the impact of equity market volatility. Once this slide broadly talks about the golden age of the performance of the 60/40 portfolio, for instance, like in 1990s to 2010, it's done really well. But in 2020s, When the interest rates started rising, both the sides of the portfolios were not doing well. And hence, in the recent time period, balanced fund lost its appeal. But I'll also talk about some real world examples and case studies of successful 60-40 portfolio implementations. So let's take a look from the tech boom and bust of the late 90s and subsequent burst in the early 2000s, because that provides very valuable lessons for 60-40 investors. During the boom, tech stocks drove significant gains in equity markets. However, the bust that followed highlighted the importance of diversification and risk management. Investors with a balanced 60-40 portfolio were able to weather the downturn compared to those heavily invested in tech stocks. The 2008 financial crisis, if you think about, was a very severe test for the 60-40 portfolio. During the crisis, both equities and bonds experienced significant volatility. However, the diversified nature of the 60-40 portfolio helped mitigate losses, particularly bonds providing stability and liquidity while equity markets were in turmoil. This period underscored the importance of maintaining a diversified portfolio and the benefits of a balanced approach. And then we have the COVID-19. The COVID-19 pandemic presented unprecedented challenges for global financial markets. The rapid economic shutdown and subsequent market crash tested the resilience of investment portfolios. A well-diversified 60-40 portfolio demonstrated its value by providing downside protection through bonds and capturing the recovery in equities. The pandemic highlighted the importance of flexibility and the ability to adapt to rapidly changing market conditions. And next, what we talk about is the central bank policies and, of course, where the interest rates are heading have an impact on the overall balanced investment strategy. We'll talk more about it in the next few slides. Okay, so what are the practical implementation considerations? Although it sounds very simple कि अगर आपके पास 100 रुपए हैं तो आप उसके 60 rupees के आप उसके stocks खरीद लें और 40 रुपए के bond खरीद लें और उसको over the period of year छोड़ दें. But things are not that simple. I'll try to emphasize the fact that we don't need to overcomplicate it either. But assumption कि हमेशा stock का portion जो है वो पूरे KSE 100 index में invested होगा, ऐसा नहीं होता. आप portfolio construct करते हैं individual stocks का भी. And what we recommend is spreading stock exposure across value, small caps, profitability, as well as certain valuation considerations or growth consideration, especially in a country like Pakistan when you invest in stocks. A basic KSE 100 portfolio may struggle to produce returns as it is had in the past, because going forward you may not see the entire 100 companies rising, but a well-diversified portfolio will perform differently. Another assumption is that the bond portions of a portfolio is only made up of government securities. This is not what we recommend either. Expanding beyond simple tables and diversifying the duration and average maturity decreases the likelihood of experiencing significant declines. For example, shorter-term bonds like the 3-month and the 6-month T-bills are generally less impacted during volatility. So अगर आपका interest rate increase होने का perspective है तो आप ज़्यादातर उस duration में invested रहेंगे. And even if they lose some value in the very short term period, और जैसे कि आपने देखा कि हम लोगों ने last 2023 और 2022 में जब interest rate increase का एक ज़माना था तो अक्सर 3 महीने और 6 महीने के T-bills में भी आपने temporarily losses for a very short duration. But they can still offer very high yields going forward. Recent declines in the bond markets are largely attributable to the rate increases by central bank, as we discussed in the past, but not a signal that the asset class should be removed from your portfolio either. So if you're staying invested in the long-term bonds, that's also in accordance with what your long-term objective is. And then you have the regular rebalancing. So although in an ideal world, you could rebalance it very frequently, like every month, but at least on a quarterly level, when you should rebalance this to make it back into the 60-40. वरना एक rising equity market scenario में हमेशा ये होगा कि आपके equities बहुत बड़ा component हो जाएगा आपके overall portfolio का. So internationally speaking, अगर आप academia या financial markets के articles पढ़ें तो they always pose a question, is the 60-40 portfolio dead? Balance strategy इतनी ज़्यादा promote नहीं की जाती, but I've been a very big fan throughout my career, and I think for a common man, this is the most simplest way to accumulate wealth. And if you don't even overcomplicate it, and when we'll see the results of the historical performance, we'll understand, okay, just this simple basic thing, how it would enhance the overall return profile of your savings. So despite that, both stocks and bond markets have seen down years, which has led to the traditional framework of 60-40 portfolio being called into question in Pakistan. It's 60% KSE 100 and 40% PIBs. Here are some reasons where we feel that the 60-40 portfolio is not dead. Just because it was down for 1 year, 2-3 years, doesn't mean that it's completely dead. And KSE 100 and bond markets have seen similar trends as internationally speaking, because it was a very challenging year globally as well. This does not negate decades of outperformance of the balanced portfolio. एक और चीज जो स्टडीज से साबित हुई है वो ये है कि 60-40 does very well after declines of 10% or more. So जब बहुत बड़े declines आते हैं तो जो recovery time period है उसमें 60-40 portfolio done better. And 2022 was not an exception. It has done worse in the past, but it has always recovered, as I said. And there's more to 60-40 than these two asset classes. So as I keep on repeating, although keep on simple, but then you could add on to further diversification through within these two asset classes or on the overall asset classes. There's more to it. Let's dive into the historic performance of the 60-40 portfolio compared to an equity-only portfolio. So हमने काफी बार subjectives पे कर ली. Let's talk about numbers. In this analysis, what we've done is कि अगर एक investor ने 100 रुपए अपने 1 जुलाई 1999 में यानी आज से 25 साल पहले equity portfolio में रखे होते versus एक investor जिसने वही 100 रुपए एक balanced portfolio में रखे होते. Because in this entire 25 years time period, JSIL 100 has produced phenomenal returns. Naturally, with an allocation of 60% in the balanced portfolio, जो total return की value है equity portfolio versus balanced portfolio is less. So आपके वही 100 रुपए equity portfolio में 7,000 रुपए हो गए होते और वो 100 रुपए अगर balanced portfolio में होते तो उनकी कीमत आज 4,000 रुपए की होती. So total return 7,000 का, लेकिन annualized return में उसको समझना आसान होगा. So annualized return 18.76% होगा versus balanced portfolio का return जो 16% है. But the important consideration and never undermine that is the volatility stuff. So the volatility of the equity portfolio would be 17% versus the balanced portfolio, which is only 9%. Then again, in the drawdown of the equity portfolio is 69% versus the balanced portfolio, which is 36%. Drawdown means कि आपकी peak से नीचे आपने कितना lose किया. So naturally, ज़रूरी नहीं है कि हर investor July 1st को आया. अगर वो किसी मार्केट की अपसाइड डाउन आया तो उसने कितना लूज किया. सो अगर उस इन्वेस्टर ने किसी ऐसे टाइम फ्रेम में आया जब मार्केट सुपर थी, द मैक्सिमम ड्रॉडाउन कुड बी हैव बीन 70%. सिमिलरली शार्प रेशियो और ट्रेनर रेशियोज जो कि फंड परफॉर्मेंस का एक कॉर्नरस्टोन है फॉर टू सी कि विच पोर्टफोलियो परफॉर्म बेटर, आर बोथ हायर इन द केस ऑफ बैलेंस्ड पोर्टफोलियो. द नेक्स्ट स्लाइड व्हाट वी टॉक अबाउट is our analysis of the daily cost average. इस analysis में what we did was कि हमने 1 रुपया invest किया daily in an equity portfolio versus balanced portfolio. So इस पूरे 25 साल में चूँकि 9,132 दिन थे, so अगर आप समझें कि जो inflow है वो 9,132 रुपए का ही था. Final value again equity portfolio में 1,01,000 है और balanced portfolio में 80,000 है. और अगर आप उसको इस प्लॉट को या चार्ट को देखें तो इन टर्म्स ऑफ रिटर्न परफॉर्मेंस इट स्टेड वेरी क्लोज और विद मच लोअर वॉलेटिलिटी. ऑफ कोर्स जैसे मैंने पीछे नंबर आपसे शेयर किए, सो वॉलेटिलिटी का डिफरेंस बहुत सिग्निफिकेंट रहता है इन बैलेंस पोर्टफोलियो वर्सेस इक्विटी पोर्टफोलियो. ऑल्सो कीप इन माइंड कि इस सिंपल एनालिसिस में वी आर नॉट टेकिंग एन इम्पैक्ट ऑफ द कैपिटल गेन्स विच डू हैपन इन केस ऑफ बॉन्ड पोर्टफोलियो एज वेल. जबकि आपकी interest rate के cycles में, the thing is we are assuming that there have been equal rising interest rate scenarios versus declining interest rate scenarios. So वो हमने उसका balance या उसको आप ये समझे कि हमने उसको negate कर दिया. This is an interesting analysis in which we have tried to compare how inflation impacts balanced portfolio versus an equity portfolio. And as we, इसमें बड़ा clearly आपको एक चीज visible होगी. So we have done it in some pockets. We've done it also for 5 years, 10 years. We also checked it for 15 and 20 years. Over a very longer term time period, in a developing country like Pakistan, यहाँ पर equity markets have done really well. So equity portfolio in terms of profits would do well. But अगर आप उसको short pocket frames में देखें तो एक rolling 5-year period. So in 25 सालों में अगर different rolling periods of 5 years में, you would see कि there are certain segments in which the balanced portfolio is outperforming equity. और अगर आप उसकी correlation check करें तो ये वो वाले time frames हैं जब CPI या inflation numbers जो है वो higher है, तो balanced portfolio does very well. So just to derive some insights in going forward as well, we may say that if you are expecting a higher inflationary environment in the next 5 to 10 years, balanced strategy would continue to do really very well. It's more prominent in the 5-year, lesser prominent in the 10-year time period. As I said, in shorter time periods, balanced might even outperform in terms of return basis. This slide illustrates the correlation of CPI with both the equity and balanced portfolios. The balanced portfolio shows a moderate positive correlation with CPI, indicating some levels of inflation protection. Bonds, particularly inflation-protected securities, can help in maintaining real returns during inflationary periods. The equity portfolio exhibits a negative inverse relationship with CPI. Also in Pakistan, there is a lag for inflation to actually materialize in the equity prices, hence which suggests that equities alone might not be able to sufficiently hedge against inflation. So in this slide, we talks about what the latest literature talks about the 60-40 strategy. On an overall basis, despite the challenges posed by low bond yields or declining bond prices and rising inflation, the 60-40 strategy remains effective and appropriately diversified. Some or most of the writers have advocated for incorporating a broader range of asset classes and maintaining a disciplined investment approach to achieve superior risk-adjusted returns. Particularly, Worth has talked about and explored the need to rethink the traditional 60-40 portfolio in light of current market conditions. He argues for the inclusion of alternate investments, and that's what we also recommend our clients, such as the real assets, real estate assets, and commodities, to enhance diversification and boost returns. The Worth has also emphasized the importance of aligning interests between investors and manager to build trust and achieve better investment outcomes. Another of the writers, Plan Corp, he questions the continued relevance of the 60-40 portfolio amongst rising volatility and changing market dynamics. But what he suggests is a more nuanced approach to diversification. And he believes that's very necessary, including exposure to small cap and internationally diversification, which of course for our local and domestic investor is not possible in most cases. But we believe that diversification within factors or sectors of the equity market would serve the purpose, as well as a broader range of fixed income securities. He also talks about regular portfolio rebalancing, which we discussed quite extensively in this webinar. So quickly moving on to the challenges and adaptation we've already talked about in our webinar on the impacts of inflation, interest rate, and market volatility on the performance and efficacy of the 60-40 portfolio. So while the traditional definition of the 60-40 portfolio may be outdated, the principle of a diversified, balanced approach remains robust. Today, we live in an age of customization where portfolios can be tailored to meet the specific needs and objectives, tilting towards higher expected returns or aligning with personal values. You have more tools than before, at least, to build portfolios that align with your goals. So, summarizing the discussion we had today, this 60-40 portfolio remains a viable and effective strategy for long-term investing in Pakistan. Despite short-term challenges and market volatility, its principle of diversification and balance provides a solid foundation for navigating financial markets. Working with a professional can help you ensure that your portfolio is well diversified, aligned with your objectives, and resilient in the face of uncertainty. To end up, I'll tell you that UTP, our flagship fund, and has a track record of over 25 years and has produced an annualized return of over 13% net of all expenses, was the first fund that, as an asset management company, we launched, and it's been doing great. If you want to talk about this fund or any of our other offerings and products, feel free to call us. You'll see the numbers in a bit. Now, let's open the floor for questions and discussions. Your insights and perspectives are valuable in understanding the 60-40 strategy from different viewpoints. Thank you.
स्क्रीन पे हम लोगों ने अपना नंबर और email address दे दिया, so please feel free to ask any questions pertaining to this webinar or our products. आप 0800008887 पे भी कॉल कर सकते हैं और आप ईमेल भी कर सकते हैं ir@jsil.com पे। So इस पे कुछ questions मेरे पास हैं। So उसमें कुछ जो हैं वो थोड़ी सी उनकी nature same है। So I'll try to address them together. एक question है how to join the strategy of 40-60. एक है can you quote some example of a 60-40 portfolio. एक और सवाल है हमारे listeners की तरफ से कि we have seen asset allocation funds and mutual funds. Is it the same as 60-40 or different in terms of diversification? Or is JS Investment has any auto solution for 60-40? So in questions ये थोड़ा सा pertain करते हैं एक similar वो. So I'll try to answer them together. और अगर फिर भी किसी को further clarity चाहिए हो तो they can ask or type in. So एक है कि अगर आपके पास बहुत सारे तरीके हैं 60-40. So एक अगर individual investor है जिसकी knowledge base ज़्यादा है, वो अपना एक, जैसे मैंने कहा कि अगर उसके पास 100 रुपए हैं और वो उसमें से 60 रुपए के स्टॉक्स खरीद ले, उस स्टॉक्स का पोर्टफोलियो वो फंडामेंटल्स की बेसिस पे और मैक्रो एंड माइक्रो एनालिसिस करके, अगर उसकी इतनी नॉलेज बेस है और वो रिसर्च रिपोर्ट्स के साथ कर ले और 40 रुपए वो इन्वेस्ट कर ले PIB 5 years में. So this is a very simple basic solution जो मैंने जिस तरह से वेबिनार में बात की. There are further ways to do that. People who don't know that much knowledge. उस 60 रुपए से आप एक लॉन्ग ओनली इक्विटी फंड खरीद सकते हैं और 40 रुपए से आप एक बॉन्ड फंड खरीद सकते हैं. There is a third way in which you invest in a balanced fund. और just before in the last of my slides I mentioned कि UTP एक balanced fund है जो 60-40 की balancing करता है and it's automatically done. So जब आप UTP फंड में इन्वेस्ट करेंगे या किसी और बैलेंस फंड में मार्केट में, तो वो आपका 60-40 का रेशियो ऑटोमेटिकली मेंटेन हो रहा होगा और उस इन्वेस्टर के लिए एक हैसल फ्री सोल्यूशन है. Now, just pertaining to the fact that asset allocation funds, so asset allocation funds typically can go out of equities at any point in time or invest the least in even in bonds at any point in time. Balance funds typically maintain this balance, and even if they deviate, that would be a 10 plus minus 10 to 20% deviation, depending on the outlook. So I think I've addressed most of the questions, but I'll be happy to elaborate it further. एक और सवाल आ रहा है कि since the equity market has already peaked, is it good time to invest right now? So first of all, the question or the answer to determine whether equity market has peaked is very difficult. अगर आप P multiples को follow करते हैं या आप typical बहुत detailed discounted cash flow valuations अगर individual stocks में जाएं, you'll see there is a lot of upside in this market left. पीक ये भी हो सकती है कि इस वक्त आपके मैक्रो इकोनॉमिक्स की बेसिस पे आप डिसाइड करें कि ऑन अ शॉर्टर टर्म फ्रेम how does the economy look like and whether stocks offer the potential. So the answer wouldn't be too simple, and perhaps I would encourage you to speak to our advisors to have a more detailed or a more educated discussion on this. Pakistan is finally trending towards lower interest rates, and the KSE 100 has responded positively. For young investors under 30, isn't a balance fund going to be more harmful at this stage? नहीं, देखें, trending towards lower interest rates means कि आपके last year interest rates थे 20% plus. अगर आपके interest rates कम हो के around 14-15% भी आ जाते हैं, which is a long journey right now from here, so 15% is still a very good rate of return. आपकी long term average is inflation की और आपके interest rate की 12 से 13% है. So anything beyond that is is a good rate. बिल्कुल low interest rate environment में yes, balanced fund strategies might not be that beneficial. Again, KC 100 जो इससे पहले वाला सवाल था कि पीक हो चुका है, पीक ना भी हुआ तो इन द शॉर्ट टर्म उसमें एप्रिसिएशन जरूर आई है, सो वॉलिटिलिटी ज्यादा हो गई है इस वक्त KC 100 की। सो बैलेंस फंड तो इस वक्त बहुत ज्यादा अट्रैक्टिव है, इसीलिए अगर वैसे भी सिंस 2000s दुनिया की मार्केट या ग्लोबल मार्केट्स बहुत ज़्यादा कोरिलेटेड हो गई हैं, तो इस वक्त अगर 2024 की मैं इंटरनेशनल भी जो एक्सपेक्टेशन है वो यही है कि 2024 एंड 25 में बैलेंस फंड्स would do really well. How to find out balanced equity from JS Bank? So JS Investments, JS Bank की subsidiary है, we offer mutual fund and we have balanced mutual funds. So आप उसके लिए कॉल कर सकते हैं हमें या ईमेल कर लें तो we can tell you further. एक सवाल है, I have two questions. Is 60-40 rule still applicable for current Pakistani market where interest and inflation is decreasing? Is this also applicable to people who are in age bracket of 45 to 55? So again, जैसे मैंने कहा कि इंटरेस्ट और इन्फ्लेशन अभी भी persistently एक कोई ड्रास्टिक कोई बहुत ज़्यादा डिक्लाइन नहीं आया है आपकी इंटरेस्ट रेट की। लॉन्ग टर्म फोरकास्ट पे डिपेंड करता है, एनीथिंग अबव in double digits which is close to your inflation, it's a good rate as long as you don't have a real return negative from bonds. Secondly, as far as answering the question applicable to people who are in the age of 45 to 55, depending on your strategy, अगर आपकी wealth accumulation के किस phase में है, yes, जो hybrid portfolios होते हैं, they don't necessarily have to invest 60-40. उनकी रेंज डिफरेंट भी हो सकती है, सो इट कुड बी 80-20, 70-30, वो बैलेंस स्ट्रैटेजी नहीं होगी, लेकिन आप अपने फाइनेंशियल एडवाइजर के साथ आप लाइफ के कौन से स्टेज में हैं और उसको किस तरह से बैलेंसिंग आपको करनी चाहिए वो आपको डिस्कस करने की जरूरत है। हाउ कैन इन्वेस्टर्स मिनिमाइज द टैक्स लायबिलिटीज व्हेन मेंटेनिंग अ 60-40 पोर्टफोलियो? सो अगर आप इस पर देखें, जो म्यूचुअल फंड्स में हाइब्रिड फंड्स जो कि इक्विटी और फिक्स इनकम में इन्वेस्ट कर रहे होते हैं और उनकी इनकम का कुछ पोर्शन प्रॉफिट ऑन डेट और कैपिटल गेन से आ रहे होते हैं, सो इनकी डिविडेंड टैक्सेशन जो है वो 15% है और कैपिटल गेन्स की इन अकॉर्डेंस विद योर ओन, so this in some way has a better or a more efficient taxation than some of the debt funds which primarily derive their income from investing in debt securities. But again, it differs in between fund to fund, but that's of a more generic guide that I could mention. एक सवाल और है, inflation was down also due to the base case effect. Secondly, PE of KSI and is still X. We have to see how aggressive is monetary stance. But do you expect further re-rating? पाकिस्तान की लॉन्ग टर्म एवरेज पी की इससे ज़्यादा है. Do we deserve a re-rating at this stage? I would, if you ask me a very yes and no kind of an answer, I would say in the very short term, perhaps things might not go in the re-rating direction. We may need the materialization of the structural reforms and many of the changes to happen to get into a stage where we could reach our long-term potential of a market PE upside from here. How often should the portfolio be rebalanced and what triggers rebalancing? अगर आप एक म्यूचुअल फंड में इन्वेस्ट कर रहे हैं तो आपको रीबैलेंस करने की आप ज़रूरत होगी. अगर आपको खुद एक इक्विटी लॉन्ग ओनली फंड और एक डेट फंड के थ्रू कर रहे होंगे तो आप, आई थिंक आई वुड रिकमेंड, और एज अ मैटर ऑफ प्रिंसिपल आप उसको क्वार्टरली रीबैलेंस कर सकते हैं. सो आफ्टर एवरी 3 months, अगर मार्केट्स बहुत ज़्यादा अप्रिशिएट हो जाती हैं इन अ शॉर्टर टर्म पीरियड, सो मे बी you will have to do it more frequently. So as a matter of principle, अगर आप बैलेंस फंड्स में इन्वेस्ट करते हैं, जो म्यूचुअल फंड्स जो बैलेंस फंड स्ट्रैटेजी फॉलो करते हैं, you wouldn't have to do any rebalancing. The fund managers would be rebalancing themselves. एक आपका सवाल है, are there any mutual funds that track a 60-40 portfolio and what are their fees? जो मार्केट में इक्विटी में जो फंड्स इन्वेस्ट करते हैं उनकी फीस आपको जनरली ऑन एन एवरेज 2 से 3% उनके एक्सपेंस रेशियो, बल्कि मैं आपको कहूँगी, क्योंकि आपको फीस के साथ एक्सपेंस रेशियोज भी उनके देख लेने चाहिए. सो दैट समवेयर यू सी ऑन एन एवरेज बट विद इन द इंडस्ट्री. बट अगर आप इंडिविजुअल फंड मैनेजर्स से उस फंड टिपिकल फंड जिसमें आप इंटरेस्टेड हैं उनसे आप बात करें, और जैसे मैंने आपके साथ नंबर शेयर किया तो आप उस पर भी सवाल पूछ सकते हैं हमारे एक्सपेंस रेशियो का, हमारे बैलेंस फंड के एक्सपेंस रेशियो का, और वी कैन गाइड यू फर्दर ऑन दिस. So there are certain questions जो I think मैंने उनके जवाब I've tried to answer as many as possible, but there are quite a few left. लेकिन I'll try to answer them individually and we'll soon send them you the answers on emails जो मैंने यहाँ पर address नहीं किए. Thank you so much.